Welcome to Talk Tickers, your deep dive into the business updates and earnings calls that really move the market. Today, we are unpacking Acumen Pharmaceuticals, ticker ABOS. This is all following their Q3 2025 financial and business update, which was held just before the market opened on November 12th.
Yeah, and for anyone focused on high-stakes biotech, this is a must-analyze situation. Acumen is a pure play. I mean, they're entirely focused on a single mechanism for treating Alzheimer's disease. So our mission today is really to assess how they're managing their cash and their clinical roadmap, specifically how they're executing ahead of two massive, truly binary data readouts in 2026.
Okay, let's jump right in. On the surface, the top-line numbers looked surprisingly tight for a pre-commercial company.
Financially, yeah. They delivered a clean operational beat. That was the headline.
Absolutely. Revenue, predictably, was zero. It's a clinical stage company, so that's expected. But the GAAP net loss per share came in at negative 44 cents. That was a huge overperformance compared to the street consensus, which had losses pegged somewhere between, negative 58 and negative 63 cents?
A big beat. And it also marked an 11% improvement year over year. But what's really fascinating, though, is the market's response, or lag of response.
Right.
We saw massive trading activity on the call day. Volume spiked nearly 4 times the prior day's average, and yet the stock ended the day closing slightly lower.
Yeah.
So tons of activity, but basically no net gain.
So what on earth does that kind of high volume, flat price action tell you? I mean, were people buying the beat or were they just running from the risk?
It tells you two critical things about these small cap biotechs. First, everyone knows the financial beat isn't real commercial success. It was purely down to efficiency to managing their spending, which we'll get into. And second, that heavy volume suggests a lot of institutional repositioning. People were trading around the news, but the underlying feeling that the stock is a huge risk bet on a late 2026 outcome, that didn't change at all.
Okay, so that sets us up perfectly to drill down into how they actually saved that money. Acumen improved its net loss by 11% year over year to $26.5 million. Where did that come from?
They managed it mainly through an 18% improvement in the loss from operations. Research and development expenses were the biggest lever. They dropped 19% to $22 million, and management was very clear on this. It was a direct result of the Phase 2 Altitude 8 enrollment completing back in March. Once you're done enrolling patients, you immediately stop paying those huge upfront CRO costs.
Right, that's a classic transition for a clinical trial. The peak spending has rolled off, and now you're in the cheaper maintenance and data collection phase. We also saw smaller but still meaningful drops in G&A, right? Down 10% to $4.5 million.
Yeah, lower legal and audit fees there. And this financial discipline, it all brings us to the most crucial variable for any company like this, the cash runway. They reported $136.1 million in cash equivalents and securities, and management confidently reiterated that this capital extends their runway into early 2027.
Early 2027. Okay, now let's connect the dots. Their main value driver, the top-line Phase 2 data for their drug, sabirnetug, is expected in late 2026. So the cash clock stops ticking just after that pivotal moment.
And that asymmetry late 2026 data, early 2027 cash out, that is the key point of financial tension here. They have just enough runway to get the data, but if there's any major delay, or if the data is just okay, not a home run, they'd be forced to finance right before or right after the news. That's why they kept stressing capital discipline on the call. They're trying to minimize the risk of a really dilutive financing event when, volatility is at its peak.
Let's shift focus then to the real engine of value here, the pipeline and the core hypothesis. Their lead asset is sabirnetug, ACU-193. The entire investment thesis hangs on its specific mechanism.
And that mechanism is the defining feature. It's designed to be highly selective for toxic soluble oligomers. This is fundamentally different from the first-gen antibodies like Leqembi or donanemab, which they primarily target and clear the big insoluble amyloid plaques.
So the argument is that these oligomers, the smaller toxic soluble forms of amyloid, they're the real drivers of the damage in early Alzheimer's. You're saying Acumen is trying to hit the root cause, not just clear away the mess.
Precisely. They are all in on the oligomer hypothesis. The current plaque-clearing therapies have shown some efficacy, but they also have significant safety risks, mainly ARI. Acumen believes that by neutralizing just the toxic oligomers without aggressively stripping away all the plaque, they can deliver a superior therapeutic index, better efficacy, safer profile. That's the bar.
Okay, so let's look at that phase 2 trial, Altitude EBIT. It's a big study, 542 patients across North America and Europe, fully enrolled since March, and top-line data still guided for late 2026.
And they confirmed two really important operational updates on the call. First, the 18-month blinded portion is running smoothly. Second, they began dosing patients in the open-label extension, the OLE, in November. And the OLE is critical. This is where they'll get 52 weeks of long-term safety and durability data. Regulators will absolutely demand that.
And on efficacy, let's talk about the endpoint they chose, the IDRS scale. Management said they need to show a clear and demonstrable effect here. What exactly is IDRS? And why use it over something more established like CDR-SB?
That's a crucial technical point. IDRS stands for Integrated Dementia Rating Scale. It's not brand new. It's a composite score built on established components, blending measures of cognition with function. Acumen chose it because it's supposed to be highly sensitive to changes in the early stages of AD. Theoretically, it gives you a clearer, faster signal. They need that differentiation to stand out.
So if sabirnetug is the foundation, their next-gen enhanced brain delivery program, or EBD, that's the option value. This is their collaboration with JCR Pharmaceuticals using transferrin receptor technology.
This is where it gets really interesting. The whole goal is to develop a next-gen antibody that gets into the brain much more efficiently. They expect non-clinical data, including from non-human primates, in early 2026. This is their biggest near-term catalyst by far.
And when that data hits, Acumen has the option to advance up to 2 candidates. They're looking at sabirnetug and a novel antibody, ACU234, which they suggested might be even more selective for oligomers.
Right, and the key risk they had to address in the Q&A was the technical challenge of this. We know this technology, using the transferrin receptor as a carrier, can sometimes have its own risks. So management clarified that the risk of ARIA, the amyloid-related imaging abnormalities in this new approach, is associated with the carrier, not the ARIA risk for a second.
Sure. ARIA-E is fluid leakage, or edema. ARIA-H is microbleeds. Current drugs see this because of massive plaque clearance. With the JCR tech, if ARIA happens, it's likely related to the delivery system, the bus carrying the drug across the blood-brain barrier. Acumen chose JCR because their carriers are engineered to minimize that specific risk. Their goal isn't just some arbitrary tenfold increase, but a meaningful increase while keeping it safe.
That near-term EBD data is clearly strategic. We also saw some maneuvering on the corporate side. A new subcutaneous formulation using Halozyme's tech, and critically, the appointment of Dr. George Golumbeski as the new board chairman. Oh, the addition of Golumbeski is a huge tell. He is a high-level biotech dealmaker, famous for structuring partnerships and M&A. This signals Acumen is positioning itself not just for clinical success, but for business development success, especially as they get closer to those 2026 readouts. This isn't just about governance, it's about getting ready for licensing or acquisition talks.
So now let's address the elephant in the room, the market disconnect. We mentioned the stock trading down after a beat, and this is all happening while the broader biotech sector is booming. The XBI ETF is way up. ADOS has struggled to keep pace.
Well, a portion of that is purely technical. They got hit with a lot of technical selling pressure in 2025. They were dropped from indices like the Russell 2000 and the S&P Global BMI. When that happens, index funds are just forced to sell, period.
Okay, that explains some volatility, but why does the rest of the market seem so hesitant? Analysts have these bullish price targets, like $6 to $9, implying huge upside.
The skepticism boils down to two things: binary risk and time. The market is just pricing in the high chance of a late 2026 failure. It's win or lose. And they're pricing in the fear of that tight cash runway we talked about. Until Acumen can de-risk their financing, the street assumes dilution is coming before that phase 2 data. And that just keeps a heavy lid on the stock price.
Okay, this is where we switch gears for our segment. This is not financial advice. We pitch a wild but plausible trade idea based on the insights from the call.
Adopting a slightly faster analytical tone.
All right.
The thesis here is that the market is underappreciating the near-term EBD catalyst in early 2026. It's too focused on the late 2026 clinical data. Right now, the stock near $2 is basically just a deep discounted call option on the whole oligomer idea. And given the high implied volatility, we're talking over 350%, we need a surgical approach.
So how do you play that kind of volatility without getting crushed if the stock just drifts sideways?
You implement a collar option strategy. And you focus it specifically on monetizing that volatility into cash flow, targeting the early 2026 EBD data readout.
Walk us through the mechanics. Why a collar instead of just buying calls?
because a simple call buy is way too expensive with vol at 350. A caller gives you leverage and income. It's 2 steps. First, you sell high premium, short-dated out of the money puts near current levels. You're betting the stock won't collapse in the short term, and in exchange, you collect a ton of premium from that sky-high vol.
You're harvesting the fear premium.
Precisely. That premium you collect is your funding. Second, you use that income to finance the purchase of call options, or the stock itself, for the potential spike around that early 2026 EBD data. It effectively creates a low-cost, leveraged play on the near-term catalyst.
And the rationale is that a positive EBD result, good brain delivery, low ARIA risk, provides an immediate value boost, de-risking the whole next-gen pipeline.
Exactly. It's a quick, tangible de-risking event. Suddenly, the company has a highly attractive second asset. It gives them a much-needed capital event that could bridge the gap to the main Altitude-8 readout. And that addresses the dilution fear that everyone's wrestling with.
A focused, volatility harvesting play on the optionality. Very clever. Okay, to recap what we covered today, Acumen delivered a strong financial beat, extending its cash runway into early 2027. But that tight timeline leads right into the core phase 2 top-line data in late 2026.
But the critical point of momentum, the thing to watch, is coming sooner. Keep your eyes locked on early 2026 for that enhanced brain delivery data.
And this raises a final provocative thought for you to consider. With the sector recovery picking up speed and the new dealmaker chairman, Dr. Golumbeski, in place, the question isn't just about the science. It's not just, does sabirnetug work? It's whether he can execute a strategic partnership, maybe a regional licensing deal for that EBD asset before the phase 2 readout. Because if he can do that, it solves their financing problem and fundamentally de-risks the whole story.
A strategic deal using the EBD data as currency would be the ultimate move.
Absolutely. Thank you for joining us on this deep dive into Acumen Pharmaceuticals. We encourage you to continue exploring the material for yourself. We'll see you on the next one.